in our current case, employees and or directors were going to be issued some of this cryptocurrency, quite how that would be taxed in the UK. And as Daniel says, and one of the issues whenever you are rewarding your employees and directors is the nature of what they're getting an employment-related security, because that has quite complicated tax issues relating to it, not only when you get the employment-related security, but down the track when you sell it. If you haven't been clear as to what you've got and what you've paid for it, you could trigger income tax at the end when you sell, whereas you might be expecting to trigger a capital gains tax charge. Certainly in the UK, the Revenue haven't given a view on whether they treat crypto assets as securities for tax purposes, or certainly not for employment-related securities purposes. Although actually in the context of stamp duty and stamp duty reserve tax, the Revenue's view in their manuals is that although they will look at things on a case-by-case basis and of course look at the characteristics, they generally take the view that exchange tokens and the like would probably not meet the definition of stock or marketable security or chargeable security. So, and the position's not completely clear, but I think probably as defined in the employment-related securities legislation, these types of crypto assets are probably not securities for these purposes. And so you probably wouldn't be within the ERS regime, although you might nonetheless want to make a protective, what's called Section 431 election, just in case the Revenue change their mind. And at least you may then have limited your income tax charge to the value of the asset when you got it. I mean, I think more widely though, obviously, if you are rewarding people in cryptocurrency, then that's certainly going to be an emolument, a taxable earnings charge for your UK-based employees. And if, as Constantine says, it's likely that these assets are tradable, then they are going to be treated as readily convertible assets in the UK, and therefore the company is going to have to value them and make sure it accounts for the relevant income tax and national insurance contributions within the relevant time period. And obviously it's then got to make sure it gets that cash from the employee.